All right, we have to talk about the FOMC expectation, and of course, with the GDP release that's going to be coming out on the 28th. Okay, but before us actually talking about the FOMC, I'm happy to announce that Webull is giving up to $120 in shares when you sign up with my link in the description box down below. And of course, just use my link and deposit $2,000 and done, basically. But for people who do not know what Webull is, if you have been actually looking at my screen over here, I've been using Webull for a very long time, since 2020 actually. Before they even came to Singapore, it is a stocks brokerage platform. And of course, they have been very, very useful to my materials, even when I couldn't trade on it. But now you can. Okay, so I'm very, very happy that they actually reached out to me, and of course, with the basic items that they actually provide, such as $0 for commission trading of a stocks, ETF, and options. Okay, so alongside with new functions that all your traditional stockbroker do not really offer you, which is fractional shares trading. So if you want to buy an $800 Tesla share, and you do not want to wait for the stock split to happen, you can kind of buy $200 worth of Tesla on Webull today. So head down to the description box down below and use my link for Webull, and back to the video. All right, so after the most recent CPI inflation data that we actually had, we currently are at 9.1% inflation rate at the moment. So personally, I think that 100 basis point increment would definitely be one of the hotter prediction. I do believe that 25 and 50 basis point increment is kind of out as it is. And of course, people will definitely argue that, with the amount of rate hikes that's actually coming in place in quick succession is a little bit dangerous. And, I do think that there's some merits in that argument, which I'll kind of come back to in a bit. Okay, so of course, I do believe that, rates are the risk of all these rate hikes coming in fast are definitely present. Okay, however, I think that cutting rates down at the moment, I think it's, we can cut down the rates when we actually accomplish the mission on the hand. And of course, the mission is, getting inflation down. I do think that, hiking the rates right now would be a lot better for us to really defeat inflation. Or we can kind of just go into a recession. And of course, I think I should kind of explain for the people who are unaware what a recession is. Okay, so a recession is basically called a recession when they actually enter 2 consecutive quarters of readings for negative GDP. And of course, in the previous quarter, we actually had a negative 1.6% GDP as it is. And of course, alongside on the 28th, we are going to be getting the GDP reading. And if we get a negative reading, then we will be quote unquote in a recession. Okay, and of course, recession is kind of like a lagging indicator. Okay, because we only know that we are in a recession only when we find out that 2 quarters later we have negative GDP. So it's a lagging indicator of about 6 months. But for what it's worth, since all the historic data that we actually have been having, people usually fires a lot of their employee after getting a confirmation on a recession. So I do think that ultimately the possibility for us actually getting into a recession would definitely serve as a consideration for the FOMC meeting agenda. So yeah, if that were to be the case, I do think that 75 basis point rate hike would easily be in the 50 to 60% possibility range. 100 basis point hike would be slightly lower. 50 basis point hike would be slightly lower. I think 25 is completely out. I think 125 is completely out as well. Okay, so of course, I do want to say that, I can also see Jerome Powell, alongside with all the dovish members thinking that, maybe a 50 basis point hike would be enough as it is. Because, I think during the meeting, something I do want to take note of, or more likely not really the meeting, but what Jerome Powell is going to come out with his summary, would most likely be words that he would most likely be saying that, from the previous 75 basis point increment that we had in the last meeting, it hasn't really shown effect. I think that it will only start showing effect from the coming months, things of that nature. I want to see things happening on those lines if they are going to go on with a narrative of a 50 basis point increment. That means that you're going to see a little bit of a pullback by the FOMC instead of a consistent push through against inflation. And of course, I do think that that will definitely be playing a big part in how markets will then move in the short term. But ultimately, like I said before, I do think that we need to really understand the market in the long term. But in the short term, it's kind of just interesting for us to really look at a small intricacy that actually plays out. So, of course, afterwards, I do believe that oil would be a big pointer in this meeting as well, because I think that, with all that's actually happening with the whole Nord Stream as well. But of course, I do think that, blaming Putin is kind of being a little bit overused as it is. So I think that, the FOMC, if they do want to solve all this kind of thing, all these issues, they should solve all these issues. But just use all the resources they have on their hands instead of just pointing fingers around. I think that would help a lot more. And of course, lastly, I'm not sure if this is going to be brought up during the meeting as it is, but I think that it does shine lights on some pointers that I think is quite important and relevant to some extent, which would be companies going through with their earnings and warnings. So, of course, if you have been reading any kind of article on the Wall Street Journal, Bloomberg, or whatever it is, on any of the news network that you actually subscribe to, you probably have already seen that a lot of companies are cutting employees and slowing hiring. So just based on the fact of slowing hiring alone, I've already covered more than just a couple companies. And just today, Walmart actually came out with their earnings and gave out a little bit of a warning, talking about the whole consumer demand slowing down, and of course with their operating profits going down as well. So I think that these are all kind of interlinked with the issues that will be talked about during the meeting as well. And of course, alongside the earnings that are going to be coming out in this entire season, I do feel that there are going to be a lot more bad news than good news. I think that has kind of been the trend for the past 2 quarters, especially in quarter 1 of 2022. It was horrible. This quarter isn't really showing us very, very good results either, especially because of the lingering COVID situation back in China, and of course with all the consumer demand and recessionary fear stuff that's going on in the US as well. But I'll definitely be talking more about this entire earnings and warnings for all these different companies in more details in my next video. I think that's going to be an interesting video for me to actually do. But yeah, do let me know about your thoughts on the upcoming FOMC meeting. If my expectation is also similar to what you are kind of expecting and such. By the way, thank you guys so much for watching. If you do enjoy this video, please remember to click like and also subscribe to my channel. And also remember, down in the description box below, use my Webull link. I think that this is a fantastic offer. And I think it's only left with like about 7 days. So, you better do it before it expires. So anyway, thank you guys so much for watching. And I'll see you guys in the next one.